Peter, what's your outlook on yields and inflation from here?
Yeah, very much agree with Mike's assessment for today's action. Indecisive. Longer term, I am concerned about yields creeping higher. Really, there are two dynamics at work. I've been concerned about higher yields since election time on the deficit spending that was going to occur. So I was concerned about the supply that was going to be needed to fund that. And more recently, I have become concerned about a combination of factors influencing inflation, both the demand pull as well as cost push. And I think yields could approach 2% if the history is any guide and we get to sort of 2 standard deviations above the very long-term secular downtrend as we did towards the end of 2018.
Investors seeing a $25 billion merger in the railroad industry today. And Frank Collins got the story for us. Frank.
Hey there, Wolf. Canadian Pacific shares down 5% after buying competing rail Kansas City Southern for $25 billion in a cash and stock deal. The big headline here, this creates the first rail network that connects the U.S. to Mexico and Canada. The deal values KSC at a 23% premium and a strong start for rails even before they've hit their COVID comps. U.S. rail traffic up 3% higher year to date. Canadian rails up 6%. Container shipping up double digits for both. Mixed reaction from U.S. rails on this deal. Kansas City Southern up big up on the news, up about 11%. CSX 3% higher. But Union Pacific, the largest West Coast operator, falling more than 2%. Back over to you.
Frank, thanks so much for that. Mike, how does this stack up valuation-wise and more broadly, more medium-term? How have those stocks done that Frank just reviewed for us?
They've done certainly quite well. They're benefiting from the fact that we have high usage of transport capacity in general. Deal obviously makes impeccable industrial logic, which, put these two networks together. And I'm sure the market would love it if it gets approval. There is a decent discount being applied by the market in terms of the implied value of this deal, even with Canadian Pacific shares going down. So maybe there's some uncertainty as to whether it gets done. Final observation is just that, we saw last week the sort of Chubb bid for Hartford Financial, even the regional bank deal, M&T and People's United. It makes sense that some of these value and cyclical sectors where they feel like they have economic tailwinds and trends in their favor are going to start to see if they can consolidate their advantage with these horizontal mergers. So most likely it's going to be a trend.
That's interesting. Peter, do you see that trend continuing? And what do you think it says about where we are in the cycle or broader market theme?
Yeah, I've been favoring cyclicals over technology now for a while, and I think the cyclical trade does have some room to run. How much more room to run, though, I'm not sure. I'm seeing this, surge in growth as being inorganic and stimulus-driven primarily. And when I just look back a year and change ago, it really wasn't this healthy environment that so many seem to be referring to, and so I'm not sure once the stimulus makes its way through the economy that it's gangbusters all over again, because I just didn't see the gangbusters before. That said, deal makers make deals, and while there's a window, I would expect that they will continue to do so in cyclical names.
Shepard Smith here. Thanks for watching CNBC on YouTube.